This past week, Wall Street tore through fresh records, while the Indian equity markets took a much more cautious path. This dashboard highlights the U.S. explosion. The Dow topped 54,000, and the Nasdaq spiked 5.9%, driven by weak U.S. jobs data. Shifting to Indian indices, the reaction was muted. The Sensex eked out a 0.5% gain near 78,500, and the Nifty added 0.8%. Global macro triggers are currently splitting the financial world into two realities: euphoric equities in the U.S. and heavily grounded defensive trading at home. This process chart maps how bad economic news triggered the rally. Step 1 shows the catalyst. The U.S. economy lost 23,000 jobs in July. That miss sent traders rushing to price in aggressive Federal Reserve rate cuts. The anticipation of loose monetary policy fueled a massive buying spree across Wall Street. Economic failure acts as the primary engine for equity euphoria, culminating in the Nasdaq's massive 5.9% weekly spike. This split-screen dashboard contrasts market hopes with central bank reality. On the left, the U.S. Fed held its baseline rate steady at 3.5 to 3.75%, but 3 Fed officials dissented, pushing instead for a rate hike. On the right, India's Reserve Bank mirrored that caution. The RBI maintained its 5.25% repo rate and a neutral stance, warning that headline inflation will peak in the third quarter. The practical outcome for borrowers is identical on both sides of the globe. Strict central bank holds mean home loan EMIs are staying exactly where they are. Shifting to corporate earnings, Bharti Airtel posted a 37.3% profit jump to 8,167 crore rupees, powered by strong subscriber growth. ONGC saw its profit more than double to 17,034 crore rupees, driven directly by higher crude realizations. But those gains were offset by regulatory headwinds. Bajaj Finance shares slid 6% after the RBI proposed stricter lending norms for revolving credit products. In global tech, Tesla and SpaceX announced a $16.8 billion semiconductor plant in Texas, dubbed Terafab, to eliminate their reliance on external chip foundries. Strong individual earnings are fighting a tug-of-war with sudden regulatory risks, capping the upward momentum for Indian financials. This 4-asset grid maps a massive commodities divergence. Crude oil dropped 6.8% to $86, while gold surged 6.6% to top $4,305. Meanwhile, the rupee held mostly fat at 95.22, and Bitcoin saw a slight 1.4% gain. Looking to next week, the definitive test for the Fed arrives with Wednesday's U.S. CPI report, while a dense slate of domestic Q1 earnings will keep Indian markets volatile. Wall Street may be celebrating now, but if Brent crude snaps back from this week's drop, it will rapidly reignite inflation fears and put immediate pressure on the Indian market.